It's really as simple as when everybody's panicking, you buy, and when everybody's euphoric, you sell. And I can guarantee you with 100% certainty that on ETF approval, everybody is going to be absolutely euphoric.
Hello, everybody. Jonah and Avi here. Welcome back to another episode of 1000X. Thank you very much for tuning in with us. Today, I'm broadcasting to you live from London, England. Hello, Avi. How are you, mate?
I'm doing all right, Jonah. Is the price of Bitcoin the same in London as it is here?
Weirdly, it is, but not in pounds. Pounds is a little bit lower, below 30K still, below from the past.
Do you remember, when was it? Was it last year at this point? It feels like it was recently, but I know it's not. When the pound almost hit parity with the dollar.
Yeah.
And there was that massive sell-off because of the gilts. That was earlier this year, no?
That was 2022. The government did something stupid with pension fund regulation. I forget what. The pound tanked, and I had this rah America. I'm American, living in London mentality. Like, the pound's just gonna keep dropping, and then it just ripped right back.
Yeah, I remember when it hit parity. It's funny how these things tend to work. It's like it's true in every single market. It's peak hysteria, peak panic, peak, oh my God, new paradigm, this time is different, it's all over. That's always the bottom. It's insane. I do remember at $1, I was browsing real estate to buy in London.
You and everybody else. That's why it bounced back.
Yeah,
I mean, London's an amazing fiscal quasi haven for a lot of people around the globe.
Not to talk about London real estate. That was September 30th, 2022. My times are way off, but I remember back then as we were browsing real estate, everything ripped back and never ended up pulling it. But I was hearing, and maybe when I come join you in London next week, we'll go do some sniffing around, that a lot of people in the UK have 10-year mortgages as opposed to 30-year mortgages. Like the rate is 10-year fixed, not 30-year fixed. Mm-hmm. And so as rates go up, it's going to put a lot more pressure on the UK housing market than it does on the US housing market. And that they're already talking to some dealers, a lot of supply coming on. So maybe we should go house shopping together.
Yeah, we could be roommates. I'm sure my wife would be super happy about that. Hey, honey.
I'm sure she would love it.
Moving in with Avi. Last week we spent a lot of time, feeling pretty good, right? The price of Bitcoin hit $30,000 token in the middle of our podcast for the first time in months. We're both long. It was it felt good. This time, why don't we take a moment to explore and learn from some of the worst trades we've ever done? So just to kick this off, Avi, or I can start if you want. What's one of the stupidest, worst, or most costly trades you've ever done in your career, and how has it helped you become a better trader since then?
Every bad trade that you take is a tremendous learning opportunity. Sometimes in my opinion, actually, you learn the most from the trades that you messed up. I learned almost nothing from the trades that I won big on. Sometimes a little bit, but realistically, I just feel good. And this was probably the biggest learning opportunity for me. It was back in 2019 when Bitcoin ripped from 3K to 14K. I had done a very, very good job riding that wave. I was one of the larger participants on Deribit at the time. There wasn't a lot of options volume going through. Vol was tremendously mispriced after Bitcoin ripped from 3K to 4K, and I just started buying upside, and I just ran up my account super hard. And then at 13, 14K, it was a little bit of recency bias. It was, hey, I've made so much money buying these options, and I've made so much money, exploiting this inefficiency that even though the inefficiency had completely gone at that point, Vol was trading plus 100. In my mind, I was like, well, I'm really good at this, and this has been a really good instrument, and I think I can make a lot of money if I keep going. And so I just really took a absolute beating at the top in 14K. because I was so exposed to upside calls, and I actually remember this one moment where I could have gotten out, and I just thought about it in the wrong way. So I remember on the sell off from 14 to 12, or it was a pretty rapid sell off, and vol,
This was in
on 2019, and vol on options in the sell-off went up so much that despite going down 10-15% in price, the value of my options only went down like 5-6%, which is insane. Like it was like my calls, despite being, going the wrong way with price, they stay the same price. And I looked at that and I thought, okay, that's a great opportunity to stay long because I haven't lost any money, so there's no reason to sell. And one thing that I've learned from that, and that's actually been a pretty phenomenal trade over the last few years, is anytime you get a massive short-term spike in vol in the crypto markets, that is a 99% hit rate sell. Like, you can build
those markets.
Yeah, you can build. Well, you can build a model on it, right? Just look at the 1 day, what's a 2-3 standard deviation move in vol. If that happens, you're probably selling. You should probably sell.
Yeah.
It makes it even better when it's close to end of month, but that's it did teach me that trade.
Yeah, it's a good example, Avi. Thank you for sharing. For me, I think it's a bit of a, well, put it this way. Earlier in my career, I was fresh out the gates, scared to lose money. And somebody finally gave me the advice like, hey, Jonah, if you trade to not lose money, you'll just lose money. So trade to make money. It involves taking some risk and put yourself out there. So I was still a little nervous, and I spent a lot of time trying to really think things through before I dip my toes in, because, I was, once you dip your toes in, you got to be prepared to get wet. So I ended up getting a couple of things pretty right, namely Facebook stock and Bitcoin, and to some extent crude oil. But I think I was a little bit, I would make 10, 20, 30, 50% on a little bit of money in my PA, and I would just take profit. I was like, wow, this is great. Then those things went up another 100x or 10x in the case of Facebook, and I missed all of it. So I thought, dang, I need to learn to ride a trend. And then that led to 2018, the worst trade of my career, which was conviction long crude oil, dead right. The market was tightening, supply was dropping off a cliff. Everything was just going right for me. I was, max long at a big company with a lot of capital, a lot of risk tolerance, having the best year of my career very quickly. Then things just got better and better. Then Trump came in and basically got a little nervous about the price of oil because high gasoline prices and new presidencies in election years. And he went a little soft on Iran. He waived the sanctions for a bit. And I didn't adapt to that information. I stayed, drum banging long crude oil because of all I'd learned about missing out on big trends. And I thought this was going to be a big trend. And I lost so much money. It took me a year and a half to get back to my high water mark. And what I've learned from that, and this applies to Bitcoin and crypto traders all over the world should hopefully take a little bit of notice, is like, you can kick yourself when you miss a big trend. You can kick yourself when you think there's going to be a big trend and it snaps back in your face. So the critical piece of analysis to do, this is what I've learned ever since that 2018 implosion, my P&L, is ask yourself whether you're on the brink of some new technological or markets-based unlock, or whether you're at the peak of a hype cycle that's going to revert because participants now perceive the asset that you've ridden to this point to be, unattractive from a price perspective. So Bitcoin miners are saying, man, 30K, this looks like a level where we should really try to finance our business for years after what we've just been through. Let's sell everything, right? Crypto could go straight back down equally if we're at 30K because a BlackRock ETF is about to get approved and 20 times more capital is about to enter this market, don't sell whatever you do. So I think that's what we got to debate on this podcast.
I think that you can learn a lot from studying previous bubbles, and you can learn a lot from studying previous trends. And one of the most important things that you can do, and probably the thing that's made me the single most money in my entire career, is being a student of history. Every single time I talk to an older trader, or every single time, I have conversations with people in this business who have been very successful, there are really two things that stand out to me. One is that they've built themselves a tremendous intuition through many hours of just studying charts, information, balance sheets, data. They've just built themselves tremendous intuition to the point where a lot of people will look at a Druckenmiller or a Soros, and they'll say, oh man, how do they make that decision? How do they make that decision so quickly? How do they make the right decision? Why do they make that decision? And the reality is a lot of it is just prior study. It's like when you're, to bring it back to our previous podcast with Noah, it's like when you're wrestling, you just build muscle memory for yourself. Like you just do certain things in certain situations and you just know to do those things. And that just comes from practice and studying. And then the second thing is that the things that they study the most it's often history. It's often understanding what has happened in the past and how do I apply that to the future. I think I'll drop some of my favorite books, and then we'll put them in the link below. But I would probably read 3. I would read The Great Game by John Steele Gordon, which is a history of Wall Street, which takes you through every single every single scam that anybody on Wall Street has ever pulled. They have anecdotes about how in the railroad boom, people would rename their companies to be the Long Island Railroad Company, and it would go up. They have stories. They have stories about Jay Gould and his cornering of markets. They have stories about, there's one famous story where a guy who's known to have a hot hand on the street in the 1920s goes to a club, writes down a list of stocks to buy. He's at a club where a bunch of Wall Street people go. He's there with his broker. He writes down a bunch of stocks to buy, hands it to his broker, and tells the broker to accidentally drop it on the way out of the club. The broker accidentally drops it on the way out of the club. And a bunch of people pick it up and they go, oh, this guy's had a really hot hand. Let me go buy these stocks. And then he proceeds to sell it to them, right? So there are all these like different anecdotes and funny things that happen. So The Great Game by John Steele Gordon. The Alchemy of Finance by George Soros, which I think is the best book in the world at teaching somebody how to play a bubble. If you're in crypto, you need to read this book. It's like a seminal text of crypto, despite being written many years before crypto was invented. It deals with the concept of reflexivity. And then the autobiography of Bernard Baruch, which is a phenomenal book that follows Bernard Baruch, who was one of the greatest traders of all time and was one of the people that successfully made a pivot into politics from trading and ended up being an advisor to FDR, just lived a fascinating life. So I think those books have really built a strong foundation for me in terms of developing my own personal trading style, which, just for the record, is generally waiting for big opportunities and then when I find those big opportunities, pressing them hard and riding that trend.
Patience is hard. I think patience and discipline are two of the most important characteristics of any good trader. And they're related. But can I add a book to your list, Avi? Just one?
Sure.
I would add The Prize by Daniel Yerkin. It is since you mentioned history, and these are history books, this is the 1,000-page, 150-year history of crude oil. And the reason why it's so important for crypto and, traders in most markets is that a commodity is tradable technology, right? And crypto is also tradable technology, which is why I think that crypto is a commodity. There are many similarities between ETH and crude oil. oil is deflationary. You can occasionally mine more, but every time you put a little bit of it in your airplane to go fly somewhere, or bus to go travel somewhere, the global supply decreases. Gas is burned. Sure, there are scaling solutions. That's the equivalent of finding ore, but ultimately it's a deflationary asset that you use to unlock value in some product or service, just like oil. And oil in its early days, which you learn in this crude oil book, the prize is that it's got a Pulitzer Prize, by the way, very good.
Oh, nice.
Is that back then there was the barbell debate that we have in crypto today. Is it useful or is it a scam? Is it garbage? Same thing happened with crude oil back in the day when a bunch of Yale scientists were messing around with it. It was like, wow, is this the future? Are we going to be able to replace whale oil or kerosene, create kerosene and make light out of it? Or is it just a bunch of tar that bubbles out of the ground because there's literally that much of it, useless, waste product, right? And so you look at the, sort of inflation adjusted price chart of crude oil in this book, and it's a wild swing. Something like on an inflation adjusted basis, one of the highest, I think, if not the highest, the second or third highest price point ever reached was in the late 1800s. And then it went down 99% from there. And then,
so that's because they didn't hard cap it, Jonah. They should have hard capped it.
They should have.
No, they should have been like, oh, whoops. That's actually really fascinating that it was deemed, there were people that wrote it off as, oh, maybe it's just black tar bubbling out, might not actually be useful. That's fascinating.
Technology.
I never, you never really think about things like that, but that's fascinating. That's great.
I liken the builders in the crypto space to the Yale scientists who are just sort of slaving away in their chemistry lab trying to refine it basically. And it's not that hard. You boil it, take the steam, cool the steam back off, and you have kerosene, which flies jets and creates light. It's just distillation. In crypto, it's like, does the world need a publicly owned spreadsheet? Yeah, probably it does. Why? To me, this seems obvious, but to all the naysayers out there, it's kind of well, why? You could have Amazon Web Services do the same thing. I don't know. We should get a naysayer on the podcast sometime.
I think at this point, the people that hate this stuff just don't understand it. So it'd be like debating a flat earther. It's like, why even debate? The thing is, all of the points, I guess this is like circular reasoning, because I was going to say all of the valid points that they bring up, I agree with, but okay, then obviously I'm deeming the valid. But I do think that a lot of the point. Okay, I'll give you an example. A lot of the points brought up around, are utility tokens useful? It's like, well, the majority of them aren't. Okay, but that's well understood by every professional participant in the asset class. It's like the majority are. What gives Bitcoin value? Nothing. It's the belief that it has value that gives it value, and the fact that it's a better money. And on a variety of different metrics, that gives it value. But it's just, there's you're right. There's nothing backing it. Okay, fine, right? What is crypto or is DeFi better or worse than the traditional financial system? The people that say that the underlying tech of the traditional financial system is better than the underlying tech of DeFi are delusional. There's no argument. It's just not true. Right, and the arguments that they might bring up are, okay, well, you can't KYC, you can't AML, you can't have private. It's like, well, you can build that on top of DeFi. It just won't be the DeFi that we see today. It'll be a very different version of it, but you can still build that, and that can still exist, and it will still be better, built on the crypto stack. So I mean, there are all these arguments that I think are just incorrect. Now, speaking of DeFi, have you been paying attention to these DeFi 1.0 pumps?
Scratching my head a little bit. Even BCH ripped 150% in the last few days. What is going on here?
I do genuinely think that a lot of these things were just horrifically underowned. I don't think there was no speculative money in them. The only people that held them were the people that were holding them for the long term. The only sellers were the people that were already holding, that were getting inflation, that were selling. So I think that this is really less of a fundamental move. I don't think anything has changed fundamentally for DeFi. I just think that it was this massive, effectively short squeeze, and people woke up and they realized that they had zero DeFi exposure, and that it's possible. I think one downstream effect of the ETF getting approved is that some people are speculating that this is happening because the SEC is being told, "Hey, loosen up on crypto." I have no insight into that. They don't hold by the Biden administration, "Hey, loosen up on crypto." I have no insight into this, but that is
similar thesis actually to yours, which I assumed was just me being lazy and not doing the research. I just assumed like, hey, something that's been fire sold for over a year now, the DeFi asset class, FTX not helping, all this stuff, right? Things just go down only for a while. Then they go up a little bit. You have a bear market rally. From the low point, you can say, wow, this is a big rally. But in reality, it's just, when after another year goes by, we'll zoom out and look at this price action as a blip in a downtrend. I just assumed it was just that kind of fractal volatility in the midst of a bear market for a particular asset class. I didn't think there was anything more to this, but worth talking about in case we're missing something obvious here.
I don't think we're missing anything obvious. I do especially think in terms of BCH and LTC. BCH is a very tightly controlled. I don't want to necessarily make any accusations, but it is a very tightly controlled asset, which means that it is very easy to move the price, and so it's very easy to manufacture these types of moves. I think LTC tends to follow, because what ends up happening in these situations is that you see a leader and then everybody piles on the secondary. One thing that I've learned time and time again trading crypto is that it's super reflexive. And so you almost never make as much money buying the laggard as you do the leader.
Yeah.
Almost never. So if you buy the laggard, it's like a 1 to 3 day trade, maybe, and you're looking for like some level of convergence of like 10 to 15, 20%, especially in this environment. But you're not looking for the same returns as the leader. And more likely than not, the leader is going to outperform your laggard, because people tend to crowd to the winner. They don't tend to buy the loser in hopes of catch up as much, unless you're talking about bull market, like crazy full on, like things are pumping 100% left and right. But even then, so for example, in this case, looking at DeFi, I do think that a lot of it is. So if I'm looking at the top performers today on my DeFi list, I've got GRT, which I don't know why is up 14%. I've got BitDAO, which is going through a rebranding to Mantle DAO, which is probably going to be beneficial for it. One thing that's interesting is that Bybit has just been such a winner out of all this Binance, all these Binance issues. And then you've got Blur as well up there, which I'm actually quite bullish on as well, just because I'm bullish on NFTs, and I think NFTs.
So you even call that DeFi, Avi, or is that just NFTs?
It's like sort of NFT DeFi. It's like a mix between the two. You've got Frax, you've got Maker. A lot of these things I think were just super tightly held assets.
Yeah. You brought up something interesting in there that I want to kind of double click on.
Double click on what are we, consultants? We're gonna boil the ocean next, Jonah.
From 30,000 feet, we could.
God.
I'm so sorry. I tried.
Dude, corporate life has killed you, man. Let's try that again.
All right. Something I wanted to think through a little bit more with you together. Kumbaya. let's talk together about NFTs.
You wanna hold my hand next?
Yeah. I miss you, man.
Okay. I'm seeing you next week.
Yeah, it's gonna be great.
It's been a while.
Yeah, it has. So anyway, you mentioned Blur, the intersection of DeFi and NFTs, and you also mentioned something about how buying the laggard is a terrible strategy and earns you a tiny fraction of the return with an explosive multiple of the risk. It's funny you mentioned those two things because the closest market to crypto when it comes to leaders and laggards is the art market. When you buy art, all of the people who are good at it, and there are very few, say, buy the best artists and buy the best pieces by the best artists. Do not mess with anything other than the best of the best. Everything else is garbage. And that's obviously it's hard to pick the best artists before they become too expensive, and it's hard to pick their best pieces until their styles become known, but that is indeed the best way to invest in art. And for NFTs being art, like, is there any other trade besides zombie punks, apes, ape punks, aliens punks? Like I know Azuki just did something kind of crazy, but is this just like totally to be ignored? Is the Bored Ape Yacht Club dead? Does this lead lag relationship that you mentioned in crypto apply to NFTs?
I don't think so. As much in the form of I don't necessarily think that it's true for something like a Bored Ape or for an Azuki or for things that were hot at a given time in the crypto sphere. Because I think what ends up happening is that you can think of a lot of the profile picture NFT projects as effectively, brands that come in and out of style. So you can think of them as like a Gucci or a Prada or a Versace and whoever has the best designer at any given moment, whoever's producing the best stuff, like an American Eagle comes into fashion, out of fashion.
So it's like a rotation. It's not like Picasso and Damien Hirst.
And it's because the team behind them are like constantly doing things with the project, right? So a lot of the like Bored Ape and Azuki and like Miladies and all these things are not where they are by virtue of what they are visually.
Certainly not.
They're there because of the community, and the community can wax and wane in potency and effectiveness. Now,
Fidenzas and Rares, though, different story.
That you read my mind. That's exactly what I was about to say. Fidenzas, Squiggles, Punks, Rocks, different story.
Who's your favorite trad artist if you had to pick one? Mine's for instance.
Okay, I don't know that much about the traditional art world. I have gotten some exposure to it recently. I think that it's a fascinating space. I know a lot more about the gem and jewelry market than I do about the art, like the art market. I just like as a half Indian, half Jew, I guess I kind of had to.
Uncut gem.
Yeah, I know a lot more about that, and I'm actually I find it really fascinating.
Why are you bullish NFTs though? Why are you bullish NFTs? Teach me that first.
So, they're really two things. I don't think my thinking is that differentiated. Yeah, one is that I think as the crypto market goes up, the wealth effect, people will want to display their wealth, and they're going to not display it in the form of gaudy purchases. In reality, they're going to buy gaudy things in the digital world, and that is going to be NFTs. People are going to take their money that they make in ETH, and they're going to go flex their rocks and fidenzas and squiggles and all sorts of other expensive things, and it will become more accepted. The other thing is that, and this stays in our little crew of me and you and everybody listening to this podcast and everybody on my Twitter. So I've, made a few friends in the traditional art world in the New York space. And they have mentioned to me that NFTs are something that they pay attention to now. Like, it's not going away in the way that I thought it might. There's actually a gallery down the street from our London office called Pace in Mayfair, And
That's where I bought my first piece.
really, and we have a lot to talk about. So they were showing NFTs at that gallery. And I do think that what's happening right now is that there's some semblance of acceptance from the traditional art world of NFTs. Way more than there was a year and a half ago. In that, because these things have stuck around, people are like, oh, okay, they're not going anywhere. Got it. Understood. It's just more of like this immersion into culture. And then there's actually a third point here, which is that NFTs are expanding rapidly outside of just art. So you have people like Nike introducing the Nike swoosh. You have Starbucks introducing their NFTs. You have artists. We actually invested in one platform called Fan3, which is helping artists issue NFTs at a greater scale. I can't give away anything too much, but they have a lot of really great DJs lined up to go issue NFTs to give exclusive access to conferences, to music. They've got some athletes as well lined up. And so people are now thinking about NFTs in a much broader context than they were previously. And I think that there's some pretty negative sentiment with respect to NFTs right now, and that most people are ignoring them. I think the percentage of people in crypto that pay attention to NFTs have dropped off a cliff precipitously, but activity is picking up and acceptance is picking up. So I'm bullish.
Me too. I'm bullish because I think we've come out of the the technology hype cycle. You have the technology is innovated, then you have the peak of euphoria, then you have the trough of disillusionment, and then it plateaus out into the enlightenment phase. I think we're past the trough of disillusionment with NFTs. Maybe not with crypto more broadly, but with NFTs for sure. I agree with you that they're sort of percolating into the trad art world. My big art guru advisor is his name's Nathan. He runs the Freeze Festival, and I was having a conversation with him in Venice last year where we talked about what NFTs could be in terms of traditional art. And frankly, the most interesting thing to me is if anybody who owns art has to own a certificate of authenticity to effectively authenticate their piece. And that document is just printed on a piece of paper. It could be forged. It's effectively a piece of garbage, right? Wouldn't it be better if all art were an NFT effectively with a physical print? And so,
by the way, that's how I feel about so many things.
Yeah, the deed to my house, like what the heck is going on?
Why?
Yeah,
why the heck would I? Yeah,
why are you going to enshrine that?
Why do I have a deed, a piece of paper that says that I own this thing? Yes, it's in a registry as well.
Yeah,
but if I lose the deed, it's still a headache.
Exactly.
Why is it in a safety deposit box somewhere?
These deeds don't last. Like, oh, this is actually a Da Vinci that no one or is it a Da Vinci? You know, this like thing that is Salvator Mundi that Prince Salman bought for $500 million. Like, what if there had been an NFT that was associated with that certificate of authenticity? Rather than being registered with the Bank of Northern Italy 500 or 600 years ago when it was created, it was just put on some chain and lasted forever. Like, that's how art ownership and ownership of anything should be stored. Is there a company you would trust with the certificate of authenticity of your art or the deed to your house? Like, I wouldn't want to trust some startup or even Microsoft with that. I would, I'd prefer to just have it on chain, frankly. And so, a business idea for any of you entrepreneurial crypto people out there. If anyone wants to create this startup, please give Avi and or myself a call. Goes two ways. First of all, NFT on-chain certificates of authenticity for trad art, and also the opposite of that, which is a service for wealthy trad art collectors who buy from galleries. They don't want to go into a MetaMask and deal with anything. They just want to sign. They want to DocuSign something and then own their art. So basically, secure storage for NFTs that are owned by that are bought at trad art galleries. That sort of dual service, I think, is a real crypto business that needs to exist. And if anyone's creating it, hit us up.
Yeah, I would agree wholeheartedly. But I don't know how we got stuck on this topic of talking about art. I find it
because it's crypto. It is for crypto.
it is.
Put it this way: if that hit it big, I think ETH goes up because again, it's a use case for the chain.
Speaking of ETH BTC, where is it going? Right now, let's timestamp it. It's 0.064.
Yeah.
And so let me preface this with, on the last podcast, we talked about being bearish BTC up until the ETF launch. We talked about being bearish alt up until the ETF launch. Since then, alts have actually done okay. BTCD, I do think is up since the podcast, but there are some select alts that have done all right. And I personally over the last 2 weeks have changed my opinion and got longer ETH BTC and have bought ETH. Full disclosure, and I've also bought other alts. I still really like my favorite trades in the world are still GBTC, ETH, Stacks, which I think is just it's going up, and then BTC upside. But we did buy other alts over the last 2 weeks because I do think that especially if BTC gets stuck in this range, we're going to see some outperformance. But I think so. The main question is, can ETH BTC keep up if BTC keeps going up? I think
no, it absolutely can't. So here's the thing: I think the best trade in crypto is long GBTC, and the reason why is, unlike trad, we talked a little bit about this last week. Unlike trad markets, where there's just more than enough capital to pre-hedge pretty much any type of announcement or anticipated information that's widely known, there just isn't enough money that can get into crypto to pre-position for what a BlackRock ETF approval would bring in, right? So because of that, there is a fundamental mispricing in the crypto market. Anybody who can buy Bitcoin right now, spot or GBTC, absolutely has the ability to get ahead of a potential BlackRock ETF approval, which I think would send the price up. And the reason why the price isn't up in a probabilistically weighted way already is, like I said, because it's hard for capital to get into crypto right now, either because the pathways, the gateways, or the will or the risk appetite is just lacking. So I think GBTC is the best trade. Just to respond to your question about where does ETH BTC go, where do you think? I don't know where it goes from here. But what I'm confident in is that if you wait for an ETF approval and the BlackRock ETF gets approved, that's when you buy, right? I think it's a dip buy. I don't think it's a buy right now.
Here's my cynical take on the matter, Jonah. I don't think the ETF drives truly meaningful flows. I think that it drives semi-meaningful flows. I mean, maybe a few billion, maybe like 3-4 billion in flows. I think a significant amount of that, unfortunately, is offset by people that own GBTC and would redeem and then get out of the trade. Because there are funds right now that own GBTC outright and will, when approved, just drain GBTC of their Bitcoin and just get out of the trade. Yes, there are a lot that own GBTC in a market neutral fashion, but there are a lot that just own it outright, basically willing to take the price risk of Bitcoin. And when that gap closes, they're just out. And I do think
there's going to be some time that goes by in between a potential BlackRock ETF approval and when you can redeem your GBTC.
Probably, but probably no
happen on the same day.
No, but I don't think it would be very long.
Yeah.
And so I do think that the flows. I do think that those flows somewhat offset. And I do think that a lot of flows are front run too. And so net, I don't know how many flows come in. I think it's net positive for BTC over a long period of time. But my bet is that, here's my take on the matter. If an ETF is approved, it looks very, very, very similar to the futures ETF approval, where it tops effectively on the day of the ETF approval. ETH runs after and catches up really hard, and then both top together for a foreseeable time period. Then we go sideways, and then in Q1 24 halving, we start going up again. That is my view on the market, is that ETF is a sale, ETH goes up, then you sell ETH, you pivot, and then you sell. Well, I think you buy a little bit of ETH now, but Then you pivot really hard into ETH, and then you sell everything like a week later, and then you just wait for the halving to get closer, and then you walk away a much wealthier man or woman. That's my view.
I like that view because I think it's one of those times, and you know my style, Avi, it's a little different than yours. I think it's one of those times where your style works better, where you really have to trade actively. You can't just sit on your hands, right? You have to be nimble, and you have to be willing to commit size, and you have to be willing to act when everybody is either fearful or euphoric. And
yeah, I think it's really as simple as when everybody's panicking, you buy, and when everybody's euphoric, you sell. And I can guarantee you with 100% certainty that on ETF approval, everybody is going to be absolutely euphoric.
Euphoric BTC, panicking ETH BTC.
And then you buy ETH BTC.
Then that's when you buy it. You dip buy it after an approval.
And then you pivot. Although right now, but that's also why, by the way, I bought ETH BTC at like 61662 area, because I noticed that the price of ETH, and this is where, I trade somewhat lower time frame, but the price of ETH was not correlating with the sentiment. And one of my favorite trades to take is, and this is harder to quantify, but there are a couple of good services that you can use to quantify. I like the TIE a lot, actually.
Me too. So shout out to Josh Frank. Great product.
Shout out to Josh Frank. Great guy, great product. I think I have to disclose that we are investors, but I actually do like the product. So what I did notice is that there is a divergence. So on from Wednesday, June 28th to Friday, June 30th, ETH sentiment just kept getting worse and worse and worse and worse and worse and worse, and everybody hated it. But price was flat. It was not going down anymore. And when I see that, I like to start nibbling. I like to start buying. It's the same reason I bought a little bit of Blur, post nuke, is because I see Blur, capturing a larger portion of NFT volumes every day. They have a lot of volumes that are running through them. They're doing well. NFT volumes are doing great. New projects are coming out. But the sentiment on our NFTs is like, where'd everybody go? Nobody care about these things anymore. So I see a sentiment divergence there. I think DeFi was probably similar. It's like post the SEC coming after Coinbase, everybody thought that DeFi would just get absolutely nuked, and since nothing has happened, it's just going up again. That actually, now that I'm thinking about it more, might be one of the reasons for up. But yeah, I want to wrap up the podcast with some just general views and general thoughts around the market. Just high level. Where do you think we're going over the next 6 months, over the next 12 months?
Okay, so great question. I think that little parcels of the crypto market are looking more like to your point that you just made, rational sort of trad markets, where, best to be greedy when others are fearful, best to be fearful when others are greedy, mean reverting, buy dips, sell pops, like really kind of sensible markets. The two mega trend assets that I think, it would be dangerous to make the, Jonah circa 10 years ago mistake selling Bitcoin, selling Facebook stock. Equivalent would be selling Bitcoin or selling ETH right now. I think we are in the midst of a multi-decade uptrend in those two assets. And so I think if you invest in a way that allows you to remain on the mechanical bull and not get thrown off, I think that's the trade. I think other things like NFTs, DeFi, they've been fire sold, probably time to buy. Other things that are looking a little frothy, a little hot, maybe meme coins, lighten up.
Yeah, I think that's in line. I think I do think that we're at an inflection point for Bitcoin where, and we're talking as if the ETF's definitely going to get approved. I put it at 75% chance that it gets approved, but I think we're at an inflection point where it just becomes an institutionalized asset class, and it becomes something that is just not going away. And that solidifies in my mind the incoming bubble, because there's still a lot of people that don't have exposure. There's still a lot of people that have written it off, but it hasn't gone away, and it's not going away. And ETH continues to pick up traction. And so the way that I view this is, I view the next few months as solidifying the base for crypto to allow for a crazy run in 24 and 25.
I agree with you. Of course, this is investment advice. Tokens are risky. Do your own research. Really, really appreciate you listening in to our views, but they are just our opinions. Not advice.
Never financial advice, because I would never do that. I appreciate talking with you as always. I'm super excited to see you in London.
Likewise.
Maybe we'll even do a podcast in person. Maybe we'll do an impromptu, sit across the table, drop a special episode. You can get your kids involved. I actually think that would be great. We'll ask the listeners if they want it.
Get some nuanced takes there.
Yep.
One syllable, 2 syllable take.
All right, Jonah. Catch up soon.